So one of the categories under my ultimate financial goal was my investing goals. And one of my investing goals happens to be to build a portfolio that pays at least $300 per year in dividends. And that's only with investing $25 a week. Now, for most of us, that's not a lot of money, but that's what I can budget for the time being. And regardless, you don't need to wait until you have a lot of money to start making a lot of money in the stock market, whether it's growth or in dividends or even both. All you need is patience, consistency, and investing into the right types of companies and stocks, including dividend stocks, especially the ones that pay you every single month. So with that being said, in this video, I want to talk to you guys about 5 monthly dividend paying stocks that last year helped me make a little over $60 out of almost $200 that I've made overall in 2022. Of course, it's not a lot of money, but we all gotta start somewhere. So let's get started with this. So the first stock is actually an ETF, or an exchange traded fund, with ticker symbol QYLD. It's called the Global X Funds, Global X NASDAQ Covered Call ETF. And there's actually 2 fairly not smart reasons why I invested into this ETF to begin with, but I got lucky at the end. I think I learned a good lesson, and it's still a good ETF to invest into, but just hear me out. So this ETF, for starters, tracks the NASDAQ, one of the huge indexes that you'll see a lot of news cover with S&P 500 to kind of give you a general idea of how the market is doing. The NASDAQ's filled with some of the top largest and most traded stocks within, I think, the US, maybe even the entire world. And the NASDAQ 100 is what QYLD tracks. The NASDAQ 100 takes a look at those companies listed within the NASDAQ and narrows it down to the top 101 largest traded companies. From there, QYLD sells covered calls to make premiums and then uses those premiums to pay its shareholders. And that's stupid reason number 1. I thought it was really cool about how they made money to be able to pay their shareholders every single month in dividends. I thought that was something really creative, and I've never heard of that before. And plus, it resulted in a pretty high dividend yield, which is reason number 2. If you've seen a lot of my videos, I tell you guys about do not get so caught up with the dividend yield. It could be really high, but there's a few things you have to keep in mind with that, including what the share price really is and what the history of that dividend yield actually is, because if it's a company that's unstable financially, it may not be able to keep that up. That was something I got caught up with QYLD. It has a dividend yield of a little over 12%, which means it pays about 16 cents per share every single month. And the 11 shares that I have, or a little over 11 shares that I have, I made about $21 last year. It's actually the most I made in any dividend paying company or ETF or whatever last year. So that was great. Now, although the dividend yield is really high, the overall growth within QYLD wasn't great. I think last year they dropped over 20%. The past 5 years haven't been so great either. But the lesson that I learned with this company is that it's okay to invest in a particular stock or ETF that reaps one benefit and may not reap the other, as long as you understand what you're doing. And with QYLD, despite the fact that they don't have much growth, it's not really going to be a growth stock for the next 5, 10 to 20 years. It has been an ETF that has paid me dividends every single month for the past 3 years while I've been investing into it without missing a month and without decreasing its dividend payout. So this is a company that if you decide to invest into it, that you may want to put a segment of your periodic investments into it to reap the benefits of the dividend payouts and not necessarily get super impacted by the overall growth or lack thereof. The next ETF is ticker symbol SPHD, which is the Invesco S&P 500 High Dividend Low Volatility ETF. This is one of my favorite, if not my favorite ETF to invest into. I think it really epitomizes the type of portfolio that I want to have. So SPHD tracks the S&P 500, another one of those really large indexes, but it specifically focuses on the top 50 highest dividend yielding but lowest volatility. That's kind of why I feel like it epitomizes the portfolio I want to have over the span of my lifetime while I'm investing. I want something that isn't going to be significantly impacted by sudden volatile movements, which could involve going down, but can consistently pay me dividends, let alone high dividends. The dividend yield with this company is about 4.4%, so it pays, I think, 14 cents per share. And over the past year, with my 6.5 shares, I think I made a little under $11 per year. Now, this company has a bit of a better growth portfolio than QYLD. It did decrease last year at a little over 1%, but I think the past 5 years, it actually did okay. And it seems like the obvious reason for that is because of the fact that it's not tracking for high volatility style companies that, yes, may give you a lot of rewards, but it can also destroy your portfolio at the same time. So that's one of the reasons why this is my favorite ETF to invest into. Plus, it has a little special place in my heart because I think it's the actual first ETF I've ever invested to and the first monthly dividend paying company or stock or in this case, ETF that I've ever invested into. But I think this is a good one for you guys to check out as well. The third one on this list is ticker symbol DIV. It's the Global Ag Super Dividend US ETF. Happens to be the last ETF on this list. I kind of call this one a twin of SPHD because it does virtually the same thing as far as tracking highest dividend paying stocks with the lowest volatility. It just happens to look at it from another index. So the dividend yield of DIV is a lot higher. It's about 7%. But that monthly payout is a bit low at 10 cents per share. So at about the 7.3 shares that I have of DIV, I made a little under $9 in that company or ETF last year. And in comparison to SPHD, as far as its overall growth, it did a lot worse. It actually dropped about 9% last year. But the one reason why I do invest into DIV as well, maybe not as much as SPHD, is the types of companies that are under its portfolio. It lists a lot of different types of companies, including one that I'm always interested in, being disruptive companies. Disruptive companies are typically companies that blur the lines between two different sectors and come out with a product that can benefit multiples. For example, you may have companies within the bio sector, you may have companies within the tech sector, you put them together and you have a company within the biotech sector, something that can make major impacts on society and can make some major profits, therefore benefiting the shareholder. So that's why I typically invest a little bit into DIV, maybe not as much as SPHD, but definitely something that I'm going to invest into this year. The next two companies on this list fall into a category of companies called REITs, which is an acronym standing for Real Estate Investment Trust. It's basically like investing into real estate, except instead of putting your money directly on the property and flipping it or doing whatever you need to do to make profit, you're investing your money into a company that invests its money into property. And that property can range from residential property, distribution centers, and even commercial buildings. Now this next company, Realty Income with the ticker symbol O, happens to be my favorite rate that I've invested into. It might actually be my favorite monthly dividend paying stock, or at least it's really high up there. And one of the reasons behind that has a lot to do with its mission statement or what it does. Realty Income takes its money and invests into different commercial properties ranging from Chipotle, 7-Eleven, Lowe's, Dollar Tree, Dollar General, and FedEx. A lot of essential companies that were very important during the pandemic a couple of years ago, and still very important to this day. I see this company as one that's going to benefit me over the long term as far as its growth, and the icing on the cake is that it pays a dividend yield. That yield is about 4.6%, which means every month it pays me about 24 cents per share. And at the almost 4 shares that I ended up with last year, I made a little under $10 in dividends. Now the past year it did drop at almost 10%, pretty similar to how the entire market did. But over the past 5 years, it's actually increased by 20%. That's really significant because one thing you have to keep in mind is that last year wasn't a great year for the stock market overall. And 2020, part of that 5-year span, was even worse, especially with the pandemic and how March started and how stocks dropped really hard. And even with that, this company still has a 20% increase over that 5-year span. So with that, this is definitely a company I'm going to continue to invest into for the long term because I really do appreciate that overall growth. And I really do appreciate even more, just as much, that monthly dividend payout that continues to increase every single year. I think for the past 60 years, I could be wrong about that, but regardless, that monthly dividend is really important for Realty Income, which makes sense because its nickname is literally the monthly dividend company. The final company on my list is ticker symbol STAG, or Stag Industrial. It is another rate or real estate investment trust that focuses on single tenant industrial, commercial, or distribution properties that range from FedEx, Amazon, and XPO Logistics. This is honestly a company that I haven't really invested into as much last year, but I do like it for similar reasons as Realty Income because its tenants represent companies that are very essential, especially when it comes to hard times, because they provide a lot of products from food to medicine to water to other essential needs. So this is definitely a company that I'm going to invest more into in the long term. I also enjoy the dividends. It has a yield of a little under 5%. And with its share price, it pays about 12 cents per share every single month. And with the almost 5 shares I had, I made a little under $7 strictly from this company in dividends last year. This is pretty much the same conversation with Realty Income as far as why I like investing into it and why I'm going to continue to invest into it more this year. Despite the fact that it did drop 25% overall last year, it has increased over 25% within the past 5 years, including last year and 2020, 2 years that were really heavy on the entire stock market. So the epitome of a great portfolio and the epitome of a long-term stock or ETF to invest into that just happens to also pay monthly dividends. So those are the 5 monthly dividend paying companies or ETFs or REITs that I want to continue investing into this year to help me get close to achieving that goal of making $300 in dividends this year, or about $25 per week. But let me know, what are your favorite dividend paying stocks or monthly dividend paying stocks that you love investing into? Make sure you leave those comments below. You guys have been sharing a lot of companies, a lot of dividend paying companies that I haven't really heard of, and I appreciate you guys letting me know, because we can all do the research and maybe add those to our portfolio and help us achieve that overall goal, including my overall goal this year, by having a net worth of $0, which I promise sounds a lot cooler than it is. But hey, I appreciate you guys watching as always, and until next time, take care.